Hello, this is David Russell, VP of Market Intelligence for TradeStation. And today, we will recap what happened in this past week. The stock market sputters as America surges and China struggles. Today is Monday, August 21st, 2023. Stocks just declined for a third week as investors grappled with a surging domestic economy and spreading weakness in China. The S&P 500 slid a little more than 2% between Friday, August 11th and Friday, August 18th. More than 90% of the index's members lost value, including every major sector group. Interest rates continued to rise. Retail sales increased by almost twice the forecast amount in July, its third straight monthly beat. Industrial production rose at triple the expected pace. Initial jobless claims and housing starts also surprised to the upside. Hopes of lower interest rates anytime soon faded as a result. The Federal Reserve also issued minutes from its last meeting, saying that upside risks to inflation could require further tightening of monetary policy. Bond traders reacted by sending yields on 10-year Treasury notes back to their peaks from October, near the highest levels in 15 years. Mortgage rates also climbed to levels last seen in 2002. The opposite thing is happening in China, where retail sales and industrial production missed estimates by a wide margin. One major developer went bankrupt, while another moved to delay interest payments. The People's Bank of China unexpectedly cut interest rates in response. The news starkly highlights changes in the global economy as the United States reindustrializes and China decelerates. Decades of globalization could be going into reverse, impacting trillions of dollars in trade and debt. Every major sector fell last week. Consumer discretionaries led to the downside, as Tesla had its biggest drop since March. The electric vehicle maker lowered prices for some cars. It also has potential risk in China, which accounts for more than a quarter of its revenue and much of its expected future growth. Financials struggled as higher Treasury yields reminded investors of conditions that triggered bank runs in March. Discover Financial fell after its CEO resigned, and credit card delinquencies rose. Fitch Ratings also warned it may lower credit ratings on banks, including JP Morgan Chase. Solar energy and Chinese stocks declined sharply. Clean energy continued to struggle with weaker demand. Gold miners slid as higher interest rates reduced the appeal of precious metals. Airlines, which are sensitive to higher interest rates because of their debt loads, fell. Home builders had their biggest weekly drop since September. Technology fared the best as analysts issued bullish notes on NVDA before its quarterly report on Wednesday. Metals eked out a small gain after Cleveland-Cliffs moved to acquire U.S. Steel. The transaction would unite a pair of businesses with 324 years of combined history. Now let's chart the market. Last week's pullback landed the S&P 500 at its lowest level since late June. The decline came after the index tried and failed to hold its June peak around 44.50. Traders may next watch roughly 43.28, which was near a weekly low on June 26th and the peak from last August. Attention is also likely to focus on Treasury yields given the strong economy and recent Fed rate hikes. The 10-year notes yield ended last week near its high from October, 4 months after holding its peak from June of 2022. Further upside in the yield could draw money away from equities and raise concerns about stock market valuations. A similar process occurred in the bear market of 2022. CBOE's volatility index is another potentially important chart because it typically moves in the opposite direction as the S&P 500. The VIX has climbed since late July. It's also back above the potentially important 15 level. Now let's turn to the week ahead, which brings the last big group of quarterly results. Fed Chair Jerome Powell also speaks on Friday, which could be an important event. Nothing significant is scheduled for today. Lowe's, Macy's, and Baidu report tomorrow. Existing home sales are also due. Wednesday features new home sales and crude oil inventories. NVIDIA, the most important earnings report, is scheduled for the post-market. Initial jobless claims and durable goods orders are on Thursday morning. Dollar Tree, Gap, and Ulta Beauty are some of the big quarterly reports. Powell speaks on Friday shortly after 10 in the morning, Eastern Time, from the Fed Symposium in Jackson Hole, Wyoming. Thanks for watching. Please visit tradestation.com for more.